What is a revolving line of credit? How do you get a revolving line of credit? How do you use a revolving line of credit to grow and scale your business? And if you have a revolving line of credit, how can you get it increased? If you stay to the end, that's what we're going to go over here. My name's Jonathan Fodera, owner of Integrated Business Financing. I've been doing this for the past 14 years, and I'm going to give you all the inside tips and tricks on how to get it, how to use it, and how to get it increased. Let's go over what a revolving line of credit for your business is. A revolving line of credit is an open line of credit that you can draw on whenever you need to use it to grow and scale the business. So for example, if you have a line of credit for $100,000 and you draw $50,000 from it, that $50,000 hits your account, that is all you're going to be paying on. The payments are based on the $50,000 that you drew, not the whole $100,000 that the line of credit is maxed to. That's number one. Number two, you're only paying on the interest on the amount that you drew. So you're only paying interest on the $50,000 that you're using. As soon as you pay that off, the interest stops. And the difference between a revolving line of credit and other financing programs is that, let's say you draw the $50,000 today to use for inventory. When you do that, you still have $50,000 remaining, and every time you make a payment on that line of credit, you're getting more equity back. Meaning, when you have $50,000, every payment you make, if every payment you made is $2,000, and let's just say dollar for dollar, that draws the balance down, well, for each payment you make, you can go back and draw on that to use those funds to help grow your business. So I'll give you a quick example. One of my clients, John Silver, he has a $250,000 line of credit. So when he needs to go and buy trucks for his logistics business, if he needs to buy 5 trucks, what he's gonna do is he typically likes to put 20% down. So if each truck is $100,000 and he wants to put 20% down on each, he needs $100,000 to put down. Then he comes to me with the invoices to get those financed, to get equipment financing. So he draws the $100,000 from the line of credit. He's only being charged on that $100,000, and that's what the payment's going to be based off of. Then he puts it down, we finance the rest of the trucks, and he has 5 trucks that he can use in his business to grow and expand. So for each truck that he adds on, he can make an additional $30,000 to $40,000 a month, and that covers the cost of the line of credit, the payment of the line of credit, and that's how he's used it to grow and expand. He even said to me, Jonathan, you make this so simple. I wish I knew you 5 years ago. I would have been way further ahead, right? So that's the right way to use a line of credit. When you're using a revolving line of credit, you want to use it for short-term needs, right? What are short-term needs? It's typically going to be inventory, supplies, marketing, adding to your staff. Because if you have a line of credit that's a 2-year line of credit, meaning it's scheduled to pay in full in 2 years, unless you draw, because if you draw, it's going to extend the term. Well, when you're using that line of credit, you want to use it for short-term needs and pay it off quick. The sooner you pay it off, the less you're going to pay in interest. And so when you do that, you're building business credit, establishing business credit, and it's helping you to grow your business. The other reason why it's important to have a line of credit is if something happens to impact your business, right, something negative, you want to be able to have access to funds. So if something happens where, let's just say a truck goes down, or you need to set up a campaign real quick, or you get an unexpected bill, by having that line of credit there, you can draw on it to cover that expense. Now, the next thing we're going to get into is why having a revolving line of credit for your business is so important. We touched on a few of those items in the past, but let's go through this one by one. Number one, it's going to build business credit. Why is having business credit important? Well, when you have business credit, it helps you separate the business from your personal assets, meaning it's not reporting on your personal credit score, it's reporting to your business. So if you go to buy a house or a piece of property, it's not going to show up on your debt to income ratio. Next, having a line of credit, it's very important to have it so you can grow and expand. And the best time to ever apply for a line of credit or any financing is when you don't need it, because you're going to score out higher. So having a line of credit is great to establish in good times because you can constantly use it for opportunities in your business. As a business owner, you should always be looking for these opportunities for growth. Maybe it's a new piece of equipment. Maybe you want to market a new product or service. Maybe you want to add to your team, and by adding to your team, you can increase revenues. There's a lot of different opportunities that business owners have, and if you sit down every month and review what those opportunities are, they're always going to be easier to get done when you have the money available to you versus bootstrapping it. Because if you bootstrap it, you're going to be constrained. And if you have the money available to you, it's going to be easier and faster to implement, and you can get it done the right way. The next reason it's so important to have a revolving line of credit is in case of emergencies. I'll give you an example. One of my clients, his name is Ed, he had a unexpected tax bill. Essentially, his bookkeeper misreported a couple things. It was a complete accident. These things happen. And when his accountant went through to file taxes, they noticed it. And what happened was they fixed it, but it created a $20,000 tax bill that he really wasn't expecting. So because he had this tax bill, he could have either used cash from the bank and then his business be a little cash strapped, which you really don't want to operate your business when it's cash strapped. Or what he did was, because we already set up a line of credit a year prior to this, he drew from the line of credit, took care of the tax bill, and paid the line of credit down in installments or in monthly payments. And it wasn't that big a deal. He called me as soon as that happened, and he said, thank God we set up this revolving line of credit. This revolving line of credit really bailed me out of this situation. So it's very important to have it, not just for growth, but for unexpected expenses like an unexpected tax bill. Now, the next thing we're going to go into and go over is how to get a revolving line of credit for your business. Now, there's a couple different ways to do this, and I want to give you all those options. One, you can go to your local bank that you bank with and apply. Now, every bank is a little bit different. They're going to ask for different things, but for the most part, they're going to be looking at your time in business, your credit, your cash flow, your profitability. And when I say credit, I do mean your business credit and your personal credit. So it is important that you establish business credit. A lot of business owners miss that step, and they're all going to ask for different documentation. However, if you come to us at Integrated Business Financing, what we typically do is we collect a one-page application, we collect your last 6 months of business bank statements, we collect a driver's license, a voided check, and your most recent business tax return. From there, we do a complete analysis, including a soft credit pull, meaning a soft credit pull, it's not going to impact your credit, it's not going to show. And then we do a review, and then we work with our underwriting team to get you the best terms possible. Typically, we can turn a line of credit around in 1 to 3 business days, right? Depending if we have all the documentation or not. Now, that's not a lot of documentation, and that's a really quick and fast process. We pride ourselves in helping our clients get into these programs. Now, before we go there and before we talk a little bit further about it, let's talk a little bit about the qualifications. Usually you have to be in business at least a year. It's preferable that you're in business 2 years. You want to be doing at least $40,000 a month in revenue going into your business bank account. You want to have at least 650 credit or better, and you want to have great cash flow. When I say great cash flow, I'm really talking about keeping strong average daily balances. So if you're doing $40,000 a month, you want to at least, at the bare minimum, be keeping $2,000 in the account at all times with no negative days present, right? So if we look at the last 6 months, we really don't want to see too many negative days, if any. And then from there, we start working on it with underwriting. Typically, you'll get approved for 25 to 75% of your monthly average revenue. For example, if you're doing, $200,000 a month in revenue, you should qualify anywhere from $50,000 to $150,000 for a line of credit. And that's really the key, is knowing where to go to get the line of credit and how to utilize it. So we helped one of our clients, John, we got him a line of credit in 2 days for $50,000, and he owned a construction company. He sent in everything. We got him pre-approved in a day, and then we had him do his online checkout, and that really, again, the whole process took 48 hours. He was very happy, and he started using it to buy inventory for his upcoming jobs. As soon as the job completed, he paid off the line of credit, and now he has it open and ready to use whenever he needs it. And he said, I couldn't believe how easy it was, and he was so happy because he went to his bank wouldn't do it, and we got it done quickly and seamlessly. Now, one of the things I do want to touch on, and we talked about this, is how to get your revolving line of credit increased. So if you have a $100,000 line of credit, you want to show that you're actively pulling and using it. And if you just pull 5 or 10,000 here or there, you're not really utilizing the full line of credit. So I usually give people 2 guidelines. 1, you want to wait at least 6 months. And 2, you want to actively use it, and you want to use it above the 50% mark. You don't want it maxed out. You can max it out in the beginning or at any point, but make sure you pay it down quickly. The biggest thing they're going to look for is your line of credit being used, and what's the utilization? And then they're going to see, were there any missed payments? As long as there's no missed payments, it's great. They want to make sure the revenue is at least steady, if not growing. The cash flow is at least steady, if not growing. And these are all things that they're going to look into. And they're also going to want to make sure that your credit is at least where you applied, if not better. So these are things to consider when you're trying to get your line of credit increased. These are like the little insider tips and tricks that I promised you in the beginning that we were going to go over. And basically, that's everything that you need to know about getting a revolving line of credit for your business. Now, let's just kind of review everything, and then I'm going to give you some actionable steps that you can take today to get yourself ready for a line of credit. 1, how to get a line of credit. 2, how to use it to grow your business and why it's important that you have it, right? You want it for growth and you want it for emergencies. Next, what can you do today to prepare? Well, you could review your last 6 months of business bank statements, review where your credit is at, and if it doesn't exactly line up, there are programs we can get you in prior that can help you. Maybe it's fixing your credit, maybe it's establishing business credit. These are all things that we can help you do today to make sure that if you don't qualify now, you'll qualify in a few months, and that's important. You want a trusted advisor that's going to be able to guide you the entire way. What do I want you to do today? Review your banks. If you don't know where your credit is, go on Credit Karma, set up an account. It's completely free, and once you do that, just actively monitor your credit, all right, and see how you can improve it. And if you need help with this or you need a line of credit, please reach out to us today, and we're going to help integrate your business, and we're going to help integrate so you can grow, scale, and thrive. All right, I hope you've enjoyed this video, and I can't wait to see you on the next one.